You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
Welcome back, everyone. Welcome back, Brandon. How's it going?
Hey. Yeah, good. How are you doing?
I'm doing okay.
You're doing all right?
So if you're listening to this podcast and it was released a little bit later, that's my fault. I've been a little bit sick, so we're doing this a little bit later than normal. So
I wouldn't say it's your fault, but
well, not my fault. Yeah, I didn't intend on getting sick, but.
It's just the way it happened. But the show must go on, right? We got so much to talk about, some big stuff to talk about today. So
we do.
The show must go on. So I've packed up my podcast recording stuff, and it was a bit of a story, really. You were sick yesterday, and we needed to get it done because I was about to go to the coast, and now I'm at the coast. So I just took all the stuff with me, and now here we are. I was at Mogo Zoo earlier today.
Oh,
I was feeding giraffes of all creatures. So that's something that's kind of cool.
Amazing.
There's a new baby giraffe at Mogo Zoo. It's insane. They've got like 9 or 10 giraffes there. There's so many giraffes. Yeah. Jeez. I feel like most zoos you'd have like maybe 2 giraffes or something, but there's like 10 there.
You'd think they'd need quite a bit of space as well.
Yeah. Well, they've got paddocks.
Huge. Yeah. They got a big space up there.
Well, it's in Mogo, so it's just in New South Wales, just kind of in the middle, near the coast, middle of nowhere kind of thing. So they just got wide. They've got paddocks and paddocks and paddocks. So lots of room.
So what are you doing up there? Is it just a holiday? Just having a break?
Just a little breather. Yeah, I'm at my girlfriend's parents' place. So
fantastic.
We're just kind of chilling out for a couple of days. Went to the zoo. Come see them, go to the beach, all the things that you can't really do.
So jealous. I bet the weather's nice as well.
Yeah. Oh, it was a little bit rainy, but now it's perfect. Perfect weather, perfect conditions. Oh, I'm kicking the feet up.
Breathe some fresh air and
looking at the ocean. Yeah, it's beautiful.
I've got my stuffy 3-month apartment air.
Yeah. Oh dear. Anyway, yeah. So that's me. Well, that's us. Jeez, it's been what an eventful kind of last couple of days. But anyway, we're back on it.
The show must go on.
The show must go on. So let's get it started.
Yeah. So today's episode is sponsored by Sharesight. So Sharesight is an application that you can use to track the performance of your stock portfolio. So it will allow you to keep track of things such as capital gains, dividends. If you have dividend reinvestment plans, then it will do all of those calculations for you, which is super helpful. Very hard to do those on your own. Currency gains, if you're buying shares internationally or you hold foreign currencies. And then the main reason why I use it is for when it comes to tax time. So Sharesight generates up to 10 different reports that can be used at tax time to easily work out things such as your capital gains, dividend income, and more. And at the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. And if you use that link, you can also get 4 months free when you sign up to a yearly subscription. So go check it out. Try it for free for as long as you want. And if you're interested in signing up to a paid subscription, then use that link.
And thank you.
Yeah, thank you very much. Appreciate it.
Because it keeps the lights on at the podcast.
Keeps us going.
Keeps us going, indeed.
Or at the very least, it pays for Brandon's Gold Coast trip.
Yeah, my nice, lovely trips to the coast. That's right.
But actually not, because we've been. That's actually been good because we've kind of just kept all of the business side of things for the podcast just all in a one account that we haven't touched. We don't touch that account, so
we just. I mean, we're not trying to make a huge we're not really trying to make any money at all with the podcast. We're just covering our costs. That's essentially all we're doing is just because we don't edit it ourselves, so we just cover all the little businessy costs to do with the podcasts, and that's basically it.
Yeah. Well,
So that's why we don't have to push advertising too hard, or we don't have to try and how annoying is it when you have like a podcast that goes for 20 minutes and there's like 10 different sponsors, and it's like they'll stop every 2 minutes, and now a quick word from our next sponsor.
Yeah, I much prefer podcasts where they get it out of the way at the beginning, and you have the choice of skipping it, basically. And I'm sure those ads don't make as much money, but it's much better for listening.
It's probably less annoying
if you don't have ads throughout the middle of it.
Yeah. All right. So what do we talk? Oh yeah, big news story. Let's start at the top.
We'll start.
Let's start with the most important stuff to discuss.
Yes.
Tesla, TSLA. Tesla. They had their battery day. Was it yesterday or the day before yesterday?
Must have been the day before yesterday.
Must have been the day before yesterday. Yeah, so big news out of Battery Day. Elon Musk gave like a 2-hour presentation, I think, and I think that the theme of the presentation was basically, we're going to start building our own battery cells here at Tesla for our cars, for our long-term vision of creating the amount of cars we want and creating all the power walls and the energy storage, the grid storage. And then from there, it's just like, okay, so that's our plan. And now this is exactly how we're going to do it. But the theme of the presentation was that the cost per kilowatt hour of battery production is declining over time, but to make a really meaningful impact on the transition to sustainable energy, it's not dropping fast enough. Like it has been dropping quite quickly, but as time goes on, it's been plateauing out, and they're only making minor improvements to the cost per kilowatt hour of battery production. So the rest of the presentation was about how they're going to start manufacturing these cells, what they're doing, what the cells are like, how they're approaching it, various different methods, and also how do they get the cost down a lot more. So they essentially have this 5-pronged approach to try and halve the cost per kilowatt hour of production. So they broke it down. Essentially, the presentation was broken down into 5 different sections. They broke it down into cell design, then the cell factory itself, then anode materials, cathode materials, and then cell to pack integration. So I guess we'll just start at the top and work our way down.
Educate me on batteries.
Sure. Well, I don't know very much about batteries. Apart from, I wish I did. I should probably study up on it much more. But in terms of cell design, so Tesla are going to produce a new cell that they've designed, which is called the 4680 cell. So I think 46 millimeters by 80 millimeters. So it's quite a bit bigger than a standard battery. And essentially, they were talking a whole lot about how the batteries they've been using, they have tabs, which I don't know anything about batteries, but essentially these tabs in the batteries really cause like some thermal issues apparently with the battery, and it means that they can't charge very quickly because they have to work around the thermal issues. But they've essentially designed this what they call tabless cell architecture, which obviously, because it's tabless, it just bypasses all that. So apparently it's the key to unlocking super fast charging and not having any thermal issues with the battery cell itself.
Wow. So was that one of the major, I guess, headlines of the event?
Yeah,
I remember hearing.
Definitely.
I was listening to something from Gally from Hypercharts, from Hyperchange.
Yeah, Hyperchange,
Always confused.
Well,
those
from
two.
Both, yeah.
Well, yeah. But Gally was talking about that on his Instagram or something. So that sounds really fascinating. I know nothing about batteries, but if they can improve the speed of charging, that's one of the major issues, I guess, with electric cars is the length of time that it takes to charge compared to fill up with petrol.
And it was like, the new cell, the design of it's got like, 5 times the energy or something, or 5 times the power or something like that. And there's this whole range of things that they flashed up on the screen. But essentially the main thing that they wanted to get across is that the new cell design is a 14% reduction in cost per kilowatt hour.
Right.
which is one of the things that they're looking to do is obviously make these. They're trying to make batteries as cost effectively as they possibly can, so that it's good for their business and very scalable. So
yeah, so reducing the cost of the battery is what that means.
yeah,
right? Cost per kilowatt
exactly.
hour.
Yeah, cost per kilowatt hour of production. Yeah, so all these different 5 categories contribute to reducing the cost per kilowatt hour of constructing the battery. So this had a 14% reduction, and then if we move on to then the next thing they talked about was the actual battery cell factory, like what the machine that's going to build the batteries and the different innovations and thought processes behind how they're going to improve that. And essentially they're just thinking about the assembly line, and Tesla are just like, yeah, we want it to be an absolute highway. Like we want this assembly line to be moving as quickly as possible. So I think that there's like 4 different parts of the battery production and assembly process. And they basically just looked at all of them and figured out how can we make each one of these more efficient, faster, more effective. And it was at this point where they talked about the dry battery electrode technology, which is what everyone's been speculating after they made. You remember they made that acquisition of a company called Maxwell Technologies?
Yeah.
It was like a year ago.
I remember Gally as well, I think, was talking about this on our podcast.
Yeah, that's right. Yeah, that's right.
He saw that acquisition and speculated that this was something that was coming from that. So very interesting.
Yeah, exactly. But this had happened like a year ago, and then there was just a whole lot of just silence, I suppose. But yeah, finally Elon and Drew, they decided to talk about it. So essentially the problem with the wet coating of the electrode or whatever is it just takes up a whole lot of energy, and it takes up a large footprint. I mean, this is just one step of the manufacturing process, and it just takes up a huge footprint with all these big like drying ovens and blah, blah, blah. And it's very energy intensive. So they figured out a way to, instead of doing the wet slurry kind of coating and then drying it out, they just have made a dry electrode, which essentially, all things considered, is just it's a 10 times lower footprint in the factory. And it requires 10 times less energy during that process to get the same job done. Wow. So I figure that's pretty good. And then all of the things that they were talking about with improving the cell factory totaled a further 18% reduction in the cost per kilowatt hour. So the cell design's a 14% reduction. The cell factory itself is now an 18% reduction. So they're saving money. There's quite big statistics to chuck out there, saving a lot of money on building these batteries.
Yeah, it's pretty impressive that they can see such drastic. Is that 14% improvement and 18%? Is that over what periods? That over? Is that over a year? Or
I think that's it's per kilowatt hour. So it'd be how much less it costs to build this amount of batteries.
Right.
So
okay. I see.
That would equal a kilowatt hour or whatever it is. So
yeah, I mean, it's a substantial improvement in efficiency.
Yeah. This is also the point in the presentation where they flashed up their goals on the screen for what they're going to try and do in terms of their own battery production. And their goals are for, by the end of 2022, to be doing 100 gigawatt hours per year. But by 2030, they want to be ramped up to 3 terawatt hours per year, and this is on top of what they already get supplied by LG and Panasonic and CATL, those other companies that also make batteries for Tesla. Right. So this is additionally to all of that. They also want to do this, which is insane, because to go from giga to tera is 1,000. So it's going to be 100 gigawatt hours up to 3 terawatts hours. So that's going to be a drastic, like a really substantial shift in the battery production side of things.
Yeah, and I mean, if they want to make as many cars as some of these big combustion engine manufacturers, it's a necessary step that they need to take to get it to that level, which is it's insane. It's amazing how much Tesla has to do. It's not as if Tesla's just a combustion engine manufacturer that just has to kind of scale up in the same way that other auto cars
copy
did.
someone else. Yeah.
They have to innovate and produce things that hasn't been done before, right? Like battery production at that scale has never been done before. I don't
exactly
think.
right. Exactly
So,
right. No, it hasn't. No.
It's a fascinating story to see them
It's
just
interesting.
continue to kick goals and continue to improve.
Yeah, and they're pioneering too, like what you say with the innovation. Like all of this stuff they're talking about, this is stuff that people aren't doing already. Like we're about to talk, we may as well just talk about this now.
Yeah, go for it.
They're going to, like, for instance, when we talk about anode materials, which is the next category of cost reduction, they're going to start using silicon. And, you know, they were talking about the main reason that other people don't use silicon already is because apparently it expands like 5 times the size when it's fully charged with lithium or something like that. So it's just like people just immediately just don't bother because of the problems, but they've like worked around the problem by not really heavily engineering the base metal and blah blah blah. But they were talking through, this is where obviously, because I don't know anything about batteries, it's just like all going over my head, all the science that they're talking about. But I'm like, this is insane. I mean, most companies would just like look at silicon, for example, and just be like, nah, there's just too many problems with it. Whereas Tesla's just like, well, I mean, if it's going to lead to, you know, a 5% reduction in cost per kilowatt hour, we're gonna give it a crack and just try and work around these problems, and that's what they're going to try and do. And then it's the same approach with the cathode materials. You know, they're trying different things. In this instance, they actually talked about how they're going to try and implement a more of a diversified approach. So they're going to have 3 different cathode materials. So they're going to use iron and then nickel and then a combination of nickel and manganese. So they've got some different options. But, you know, they talked about in this section like locally sourcing materials. They were talking about how far, like if you track the lithium molecule or atom rather, and you track the nickel atom and you actually track it from the start of the process through to being in a battery, it goes around the world like 5 times or something.
Whoa.
So they were like, yeah, we need to try and do some stuff differently. So they're going to like try and source all of their battery stuff locally in the United States and try and cut the costs there. And overall, all of this stuff is leading to another 12% reduction in cost per kilowatt hour, which I think is pretty interesting.
Wow. Okay. Jeez.
And then we got one more thing to get through. Sorry, we're spending a lot of time on this.
No, this is really interesting. So that's 4 out of the 5 prongs.
4 out of 5. Yeah. So we've had we've had a 14% reduction, then an 18% reduction, then 5%, and then 12% reduction in cost per kilowatt hour. So I think that takes them to, I don't know, like 49% or something like that.
Yeah.
So they're aiming for 50, so they haven't got there yet.
But wait, there's more.
But wait, there's more. Exactly right. And then this is the cell pack integration. This is the stuff that Elon was getting really excited about, because at the way that the cars are currently built is like they build the car and then the battery pack kind of slots into the car, I suppose. But now this new design is actually having the battery pack completely redesigned to be a structural part of the car. So they're essentially going to cast the front of the car as one piece, the rear of the car as one piece, and then the battery pack itself becomes the joining structural support between those 2 pieces, which I find really interesting. Wow. But essentially the re-engineering of the battery pack means to be a actual integral part of the vehicle itself, as opposed to just a battery pack that gets stuck onto the vehicle. It means that through the engineering there's 370 less parts that they have to produce in this new pack. Just because it's more efficient, because it is designed to be structural. They also talked about, it's going to be 10% lighter, and overall it'll lead to So I mean, good mass, really good mass reduction, and overall this will give them another 7% reduction in the cost per kilowatt hour as well. So that takes them over the 50%.
Yeah, I mean,
which is what they were trying to do.
The mass is a big one for electric cars.
For electric cars, for sure.
Batteries are much heavier, right? Than
really heavy
cars. So being able to get that down, because I would imagine that if it's a much heavier car as well, it would require more energy to move it. I don't know much about
of course.
physics,
Of course. I mean, that's like Formula One cars. They try and make them as light as possible it means
it's my basic.
It means it's more efficient.
It's my basic understanding of physics there.
Well, exactly right. I mean, definitely you want it to be as light as possible, so you don't have to move the heavy mass. But there you go. So I guess that after they spoke through this whole presentation, they flashed up on the screen kind of like a summary slide, I suppose. So overall, it gave them a 56% reduction in the cost per kilowatt hour to produce these batteries. Also, what's really interesting is that they predict that these new innovations will give them a 54% increase in vehicle range, which is really quite staggering, quite mind-blowing. Yeah, when you think about the Model S has already got, I think it's like 400 miles of range. I'm not sure what 400 miles is in kilometers, but
I'll look it up.
Yeah, pretty decent.
640 kilometers.
640 kilometers of range.
Wow.
And if they can implement these cost savings and mass reductions and whatever, and end up getting a new battery pack in there, which gives them 54% increase in range. I mean, that's pretty staggering, really.
I mean, getting 900 kilometers, that's a lot.
Yeah, that'd be insane.
That's much more than most cars.
Yeah,
most combustion
for
cars.
sure.
Even though, it would take longer to charge that than to fill up a petrol car. That's kind of what you need, I guess, because of that problem at the moment, right? You would want it to be able to take more charge or to have more range than a regular car. But
for sure.
Most electric cars at the moment have less range than a typical petrol engine car, right? So that's just crazy.
Yeah. And then the businessy side of this thing is also interesting. On this summary slide, they also showed that through this new system that they're going to start implementing, it should lead to about a 69% reduction in investment per kilowatt hour. So, I mean, if their next best competitor, if they're 69% better than their next best competitor at making batteries, I mean, that's pretty decent advantage.
Crazy. Yeah. That's crazy. That's like going from $1
big numbers, isn't it?
Down to 30 cents in investment.
Yeah, exactly. Yeah.
That's insane.
It's like you want to build a house for $1 million. Well, we can build you one that is going to be exactly the same, in fact, better, and it'll only cost you $300,000. It's like, wow, genius.
That's why looking at a figure like the return on invested capital is so important for investors, because it really does demonstrate which management team is really effective within the business, which ones are actually innovating and coming up with solutions to reduce costs and do things better in a more efficient way. I'm sure that's going to have a substantial increase or contribute to a substantial increase in the return on invested capital over the next few years and beyond.
Yeah, you'd imagine so.
And, this is just one battery day. I appreciate
it's pretty insane.
It's amazing how much they can do. Surely the investors loved this. Surely the stock was up huge.
Yeah, well, up huge, yeah. Of course it was. No, in typical Tesla fashion, they announced something amazing and then the stock price tanks.
Oh, dear.
Yeah, well, it went down. Well, it's gone up, I think, 2% overnight, but the night before it went down by 10%, which, it just blows my mind, really. I mean, Elon and Drew have basically come out and told the world how they're going to just be able. I mean, when you think about what's going to be the technology of the future, the battery is going to be pretty damn critical over the next 20 years. And they've basically just outlined this very detailed plan to make the cost of producing these new, more efficient, better batteries. They've announced, this amazing approach that's going to help them do it far, far cheaper than what is the industry standard. And what do you know? Investors are not interested, and the stock goes down by 10%. But yeah, I don't know. I guess this is why it's just like, that's classic stock market. I mean, I'd hate to be a trader. I'd hate to be a short-term investor, because you just can't pick it. I mean, sitting there during the presentation with all these massive numbers that they're talking about and all these massive cost savings, you're like, well, this is good. I mean, good things. You would imagine stock price might go up, but you just can't predict it, can you? Short-term stock market stuff, you just cannot predict it.
No, not at all. It
no
would drive
chance.
me insane trying to figure out what's going to happen to a stock tomorrow.
Yeah, can you imagine like trying to trade this news and then watching it live and being like, oh yes, this is fantastic. Oh, I've made a great call. I'm so glad I bought before this. And then afterwards you're like, wait, what? 10% knocked it. What?
Yeah.
But that is, I mean, somehow, I mean, it's really surprising just how much Wall Street hates Tesla. Like they really don't like, because I'm looking at all of these articles afterwards and it's just like Tesla battery day disappoints, such a letdown. I'm like, wait, did you listen to the same? Did you listen to the same thing that I listened to?
It's crazy because bonkers. Like the biggest risk to Tesla is that their first mover advantage that they have at the moment would get erased, that other businesses in the car industry could quickly catch them. They would innovate and catch up. But having days like this where when they're seeing a 70% drop in investment per kilowatt hour from these initiatives in a single, like that's just like, this year's event.
It's like good luck.
It doesn't indicate to me at all, from my very uneducated opinion, that that Tesla is getting.
I think you know more than you think.
I know a little bit, maybe more than like the average person if you just asked on the street, but not enough that I would invest in them or anything.
We're not Elon Musk level. Pretty insane. So anyway, that's kind of a wrap on Battery Day. Overall, I thought it was very interesting. I mean, it isn't as exciting as seeing, a new big truck come out onto the stage and then a new Tesla Roadster come up onto the stage and be like, look at these new products. But I think if you're an investor and you care about, the financial success of the company, then, them talking about the manufacturing side of their business, the battery side of their business that's so integral to every single product that they offer, then you should be more excited for news about this stuff than, a flashy new product from an investor standpoint.
I mean, I guess this day is more about like it's less fancy because it's more about cost reduction rather than like sales. Yeah, it's kind of like improving margins kind of thing. Like keeping more at the end of the day. I know that you mentioned that range is going up. That's obviously improving the product, which would contribute to improved sales. But mostly it seems as though it's around like just becoming more efficient. Which is not super exciting to a lot of people, I think, but should be exciting to you if you're an investor.
Yeah, definitely. Anyway, should we leave Battery Day there and move on to a different news story?
Yeah, where should we go now?
Where should we go? Do you want to talk about TikTok?
Yeah. So we can talk about
It's been an interesting kind of story with TikTok, hasn't it?
Yeah, and I read a few articles just before about this, and I mean, there's a lot going on with TikTok at the moment. And
it seems hard to understand. It seems like no one seems to have the full story.
Yes, yeah.
If I'm correct.
Exactly. I would read one article and it would say one thing, and then I'd read another article and it would say something else, and I'd be like, hang on a second, I just read that this person's an 80% owner, but it was very confusing.
Exactly right. Yeah, and there's we're not sure how much of TikTok different parties or different entities are going to own. Anyway, tell me about it.
Yeah, so I'll tell you. I mean, there's a couple of things. I think you wrote up a little bit about the injunction. So one of the major things that is going on with TikTok at the moment is that the government in the US has put an injunction to remove TikTok out of US app stores. So that's going on at the moment, and TikTok's obviously in the process of trying to at least get that pushed back so that they can make a deal rather than just barring it out of the US before a deal is made, and that having significant consequences on their business. Was there anything in particular around that? Because I didn't read too much into that part of.
No, I just looked at an article. It says here that TikTok, they've asked for a preliminary injunction against a possible government ban as it seeks to avoid being drawn into a geopolitical clash between the US and China. Company on Wednesday asked a court to block a looming ban of the app, saying the action will inflict direct, immediate, and irreparable harm to the popular app, which I guess makes sense. I mean, as soon as people if it gets banned and then and people stop using it for a period of time and then it gets unbanned, I mean, that's a hard battle to try and win all those people back, because they've probably all gone to maybe say Instagram, and it's like, well, once they're all back on Instagram, then it's just like, hey guys, no, come back. Remember TikTok? Mm-hmm. It's like, oh yeah, but now we're all using Instagram. So it's like,
yeah, exactly.
You definitely want to try and get on it before try and stop it from being banned in the first place. But
oh yes, especially considering Instagram's new Reels, that is basically a direct competition to TikTok, is now available, and I think it's available everywhere. I'm not quite sure.
I'm not sure.
But yeah, I mean, even if they got banned for a month, where are all those creators gonna be producing content? They're gonna go straight to Instagram, I would guess, at least. And that's going to draw a lot of audience away from TikTok over the long term. So certainly interesting.
And then what's the deal? And then so Microsoft, I think, tried to start forming a deal with TikTok, and now it seems like it's more likely to be Oracle that's going to try and buy a stake in it.
Yes.
Do you know how it's kind of going to play, or how it's looking like it's going to play out at the moment?
Yeah. So I don't know the details of the Microsoft deal. That deal fell through.
Yeah, me neither.
One thing I did see was that the Microsoft CEO was having a look at the Oracle deal, which I'll talk about in a second. And the Microsoft CEO basically said that deal looks nothing like what they were looking to do. So,
I mean, that kind of makes, different.
Yeah, it kind of makes sense why theirs fell through, because it probably was a substantially different deal. Maybe they were looking to buy more of the company or something like that. But the deal that's kind of the front runner at the moment is Oracle and Walmart, which is interesting.
That's odd.
Very, very odd, right? So they're diversifying into social media platforms.
Yeah, just social media apps.
It's really strange.
That's bizarre.
Yeah, it is kind of bizarre. So Oracle and Walmart. So there's a few reports that have kind of gone on this week. On Saturday, the first reports came out that the deal was this. So it was that Oracle was going to buy 12.5% of TikTok Global, which would be a new company that was being formed.
Right.
And then Walmart was going to buy 7.5%. So those two US companies had a combined 20%. And then ByteDance, which is the Chinese owner at the moment, would retain 80% ownership. So that was kind of the first thing we saw happen, and that was on Saturday, I believe. Then Trump on Monday apparently said that he would require ByteDance to give up control of the company in order for him to accept the deal, because Trump at the end of the day is going to basically approve or decline this deal, which is kind of strange.
That's crazy.
Even though he's not really involved in it personally. It's I don't know. It's strange that he gets the final say. I
wonder if he's got a personal short position or anything.
Yeah, probably.
Probably. Wouldn't put it past him.
Yeah. So apparently Trump was unsatisfied with that deal. But then I also saw an article that suggested that Trump had said earlier this week that, he gave his blessing for that deal. So I really don't know what the truth is there about
who knows
that. But then to add even more confusion, 3 days ago, Oracle made a statement and they said that Oracle and Walmart will be the new owners, and their shareholders would be receiving TikTok shares in TikTok Global. So that makes sense. And then they also said that ByteDance would have no ownership in the company. So
what the hell?
So a lot of people were very confused about this. The couple of articles that I read, they tried to reach out to Oracle, and Oracle has not made another statement since then to clarify what they mean by ByteDance having no ownership. So because we first got this deal that said that ByteDance would have 80% ownership.
Hey, ByteDance is like, wait, what?
Well, pretty much. So ByteDance made a blog post saying this was just false.
Oh, really?
So clearly there's some confusion between Oracle and ByteDance around what this deal actually is. So I mean, I don't know. No one really knows at the moment. Oracle hasn't made a statement to clarify what they mean. And then I saw another article that the Chinese government was going in the process of approving or declining that original offer, the 80%, the 12.5% to Oracle, the 7.5% to Walmart. So I have no idea what the actual deal is. I don't think Oracle...
confusion.
Apparently Oracle doesn't know what the deal is, even though they're buying it. So...
That's bonkers. I guess this one might need another week or two to play out. And then we might have to check back in with what happens.
Yeah, it's very strange. Yeah.
It seems like there are 3 people saying, no, we own it. And then 3 people saying, or 3 entities saying, no, they don't own it.
Yeah. And I couldn't
bonkers.
really find that much information about this new TikTok global company. I'm not sure if it was all operations outside of China or if it was
Yeah, because
everything.
it doesn't exist yet, does it? Because that's what they're going
Yes.
to turn it into to get the deal done and
Yeah.
have it not be banned in the US.
Yeah.
So I don't know. Will it be just operations outside of China? Will it be everything? Will it be this? Will it be that? Who knows?
Yeah.
I just don't think we've got enough information, do we?
No. It seems like it's just, it's very confusing at the moment. We'll have to wait to see what Oracle comes out and says again, and then also what the Chinese government, whether they approve or decline the deal. We'll kind of see what happens, I guess, there. Yeah.
Yeah. Oh, there you go. We'll have to check back in with this one in maybe a week or two.
Yeah, definitely.
All right, should we move on?
Yep. What have we got?
All right, let's do it. How are we doing for time? Oh, we're not looking too bad for time.
Yeah,
here's an interesting one that I wanted to talk about because this is actually kind of interesting to me. Microsoft, speaking of Microsoft, they are buying Bethesda for 10.4 billion Australian dollars. So I think it's $7.5 billion US dollars. Yeah. So, for those that don't know, Bethesda, well, you probably do know Bethesda, they are the game studio that makes the Elder Scrolls games, the Fallout games, Doom. They got a whole bunch of other titles. They're coming out with a new game, which is called Starfield sometime, which a lot of people are looking forward to. But you probably know them as the makers of Skyrim.
Yeah.
Skyrim or Fallout.
Yeah.
Yeah, or Fallout. They're the big ones, aren't
games.
they?
Yeah.
Yeah.
I really like when a studio, I mean, there are good games that come out every single year, but there's some studios that make games where they bring it out every 3 or 5 years, and it's just elite. It's just so good. Like the Red Dead Redemption, who's that? Take-Two Interactive, I think.
Exactly.
And like
Rockstar,
the GTA games.
Yeah, Grand Theft Auto also Take-Two.
Yeah, so like games like that you just know there's always so much hype around them. Even the Doom games, Doom games, Fallout, Elder Scrolls, right? They're all games that don't bring them out every year.
I don't think so. Yeah, the Elder Scrolls. I think when was Skyrim released? It was years ago. I was actually surprised at how long ago Skyrim came out.
Probably like six years ago or something. 4 years.
I think it's actually longer. I think you're going to be surprised. It came out in November the 11th, 2011.
Oh, 9 years.
2011.
Wow.
9 years old. So there you go. Yeah. Long time between drinks, isn't it? What about GTA 5 release?
That would have been 5.
2013, GTA 5,
2013.
2013. Not that GTA is made by Bethesda, but
No.
but it's one of those titles where a very long time between drinks. And then, what you're saying, they come back and just hit it out of the park with the next one. Kind of like what they just did with Red Dead Redemption.
Yeah. It's kind of an interesting strategy.
Sorry, I've lost my...
It's an interesting strategy because there's such a dramatic difference between each game. Like it's such a dramatic upgrade.
It's a step change
on the
isn't it?
previous game, rather than you just getting the next year's COD, for example, and you're just like, "What? Is this the same game?" Like, why am I?
Yeah, and that's so interesting because like because the company like Take-Two Interactive, I think they make some of the like Madden 2020. You know those sports
NBA
games.
2K.
Yeah,
Yep.
2K. Yeah, so they get the yearly updates. So they kind of play into that model where it's just kind of like the same game plus something a little bit different, updated team lists or whatever. But then they also play the long game where they've got the Rockstar section where they're 7 years between titles, 8 years between titles or something. So it's kind of weird. Like a company like Take-Two are playing into both strategies. But I think Bethesda are definitely like, let's just take our time with it. Let's, they create games over multiple years and then just hit it hard. Hit it out of the park when it comes along.
I wonder how that works for their revenues, because I wonder if they make a lot of revenue in one go when those new games come out, or whether they're getting royalties spread out across the years. I don't know. It's strange.
Who knows? They must have a good structure. I'm sure there's a lot of kind of paid online content or something like that.
Yeah, definitely. All right, so we've got a little bit distracted. What's this story? What's the actual story here?
The story is that Microsoft's buying Bethesda.
Right.
So the thing here reads that so the software giant being Microsoft, said it was going to pay 10.4 billion Australian dollars for ZeniMax Media, which is the parent company of the video game publisher Bethesda Softworks. Microsoft said the deal will help beef up its Xbox Game Pass subscription service. So that's kind of their motivations behind this, the purchase. Interestingly, Xbox Game Pass subscription already has 15 million subscribers, so it's pretty decent. It's a good size.
Yeah.
So I happen to think that this is actually quite a tactical, quite a strategic kind of acquisition for Microsoft, because we know that it's Microsoft versus Sony, right? It's Xbox versus PlayStation, and we're getting that rivalry coming out this year with the new Xbox Series X versus the PlayStation 5. So I think that Microsoft's just kind of trying to beef up their stake in the video game industry because they've got so much cash to splash, because obviously they're Microsoft. Why not put some pressure on Sony, who's obviously PlayStation, and acquire a very, very well-known, well-respected, much-loved game studio like Bethesda.
Yeah.
And they've got the power. I don't think that they would obviously make Elder Scrolls games or Fallout games, exclusive to Xbox, because I think they would just miss out on too many sales from the other side of the pond. But it's a positive. It's kind of an aggressive step to say, well, every time you sell another copy of Skyrim on the PlayStation, then guess who's getting that revenue? That's right, we are.
Yeah, it's an interesting one, because a new console doesn't come out maybe every like 7 or 8 years, right?
Yeah, it's
very
Time,
infrequent.
yeah.
So it's kind of like they have every 7 or 8 years they get a chance to convert someone who's upgrading their console. Like that's the only chance really you get. I would say it's probably the average person is going to buy one or the other, and they'll stick with that. And then maybe when there's a refresher in 7 years, they change if there's a much better offer, or there's something that's outstandingly better. So it seems like they're definitely there's a reason why they're doing that deal right now. They can improve their subscription service and hopefully get more people to buy an Xbox instead of a PlayStation.
What's the phrase? While the iron's hot?
Strike while the oven. Strike while the iron's hot.
While the iron's hot. Yeah, exactly right. I mean, it makes sense. And we think about the future of, say, video games, and, eventually gone will be the days of going to the video game store and actually picking up a physical disc. It'll all be much like what television's turning into, subscription services. We're already seeing that. Obviously, Xbox Game Pass, Xbox Live if you want to play online, but it'll all be kind of, digital downloads in the future. So, they're just kind of positioning themselves to try and do better in the subscription space when it comes to video games. But I thought that was pretty interesting.
Yeah. You an Xbox?
And
sorry, go on.
I was just going to say it's not like this is the first big acquisition, because I was just going to say that Microsoft already owns, I think they own Minecraft and they own Halo as well. So yeah,
interesting.
So they've already got a fair few titles. So
yeah,
what were you going to say?
I was just going to say, you an Xbox or a PlayStation man?
What do you think I am?
PlayStation.
Really?
Yeah.
You're wrong.
Ooh.
You're wrong, man. I'm an Xbox man.
I should have known, actually. You're the one who added this story.
Yeah, exactly. Are you a PlayStation or Xbox? You're Xbox, aren't you?
No, PlayStation.
Oh my gosh, we don't know each other at all.
We should have stopped this podcast right
now. So you're a PlayStation, aren't you?
I am. Yeah.
Yeah, right.
It doesn't. Well, it matters a lot less now though, because of a lot of games are doing cross-platform.
Yeah, yeah. So, it's basically the same, isn't it?
Yeah.
Yeah. Well, I actually used to be PC gamer.
Me too.
But then when I had this funny thing, when I actually started the YouTube channel, I would have such little space on my hard drive left to edit my videos that I just decided to make the switch, and I was like, okay, I'm going to buy an Xbox or a PlayStation, whatever, and that's going to be what I play video games on, and then I'm going to leave my computer just to be able to edit my HD footage. Yeah, so I pretty much
did the same thing.
Oh, are you serious?
Yeah.
Oh, that's hilarious.
Except that I bought an iMac and I wanted it just to be just editing, but the same purpose. It was just that I bought an iMac, and therefore most games don't run on Mac. You can get some games, but I'd rather just keep it clean as possible.
Interesting. Mac has definitely stayed in the more professional production kind of space, as opposed to video games. They really don't. I don't know. They're not really known to be video gaming machines.
No,
are they?
Not at all. Yeah, there's no like, you can't go to their website and be like, how do I build this to play games? And
exactly right.
Most games you can't get them on Mac. I'm pretty
sure. I find it interesting that they've kind of just let that one slide. I mean, they make phones, PCs, laptops. I'm surprised that they haven't really delved into that too much.
Yeah,
it's kind of interesting.
Very interesting.
Yeah. All right. Well, what should we move on? What should we talk about next?
Yeah.
We got an interesting story up next. You want to hear about a massive fine?
Oh, yes. Who's getting fined?
Westpac is getting fined. You remember how there's all that stuff coming out in the news ages ago about how they had the money laundering breaches? They failed to recognize transactions that could be involved in money laundering.
Yes, yeah. At
you remember that?
ATMs or something, there was a number of strange transactions at ATMs, deposits and withdrawals, and the banks
it was overseas.
Yeah,
it was overseas.
Banks just were turning a bit of a blind eye to what was going on.
Well, would you get this? Austrac have now settled with Westpac. The money laundering case is now over, and Westpac have been fined $1.3 billion.
Whoa.
1.3 billion with a B. That's a lot of cash.
That has got to be one of the biggest fines in Australian history.
And I'll tell you why it's one of the biggest fines ever is because they had to settle more than 23 million breaches of anti-money laundering laws. 23 million. Jeez. Imagine if you just breached it a couple of... I imagine they probably got a bulk discount, to be perfectly honest. I imagine your penalty would still be quite harsh if you had one money laundering act.
I'm looking at this. It's $56 per breach.
$56 per breach. There you go.
That's nothing.
That's fine.
Oh, I can.
So there you go. Take away from this story, if you're going to get done, if you want to try and launder money, do it in bulk.
Yeah.
Get all your friends together, launder all of your money at the same time, so that you can get a mad discount when you get fined.
Yeah. Exactly right.
Oh my gosh. What does it say here? The penalty is the biggest in Australian corporate history.
Oh wow. So
and is almost double the previous record, which was $700 million fine paid by Commonwealth Bank for almost 54,000 money laundering breaches in 2017.
That doesn't add up.
No, it doesn't, does it?
What's going on there? Commonwealth had to pay $1,300 per breach.
Did you do that quick maths? Yeah, exactly. $700 million fine for 54,000, or a $1.3 billion fine for 23 million.
I would be very upset if I was Commonwealth Bank.
Yeah, Commonwealth Bank should get on the phone to Austrac.
They do a fraction of the offences and they get almost the same fine.
Yeah,
what?
Yeah.
I guess in a situation like this, it's not really the number of like breaches that's important. Like it's a lot of breaches, let's just say that. And then it's the fact that they let it happen kind of thing.
Yeah. What did you say the cost per breach for Commonwealth was?
I thought it was 1,300, but maybe I did that
1,300.
I might have done that maths wrong.
1,300 times what was the thing for Westpac? How many breaches? 23 million. 23 million equals... Holy smokes. Well, I mean, fair enough. It would have cost, if they had applied the same rate per breach, it would have cost Westpac is that right? $30 billion. Yeah, that wouldn't have worked, would it?
Actually, I think I did that wrong as well. I think it's
Did you?
I think it's 13,000.
13,000
per breach.
Well, there you go. 13,000 per breach. That's
like now I'm not sure. I'm really tired.
2.9 trillion. I don't know. Who knows?
Not sure.
Enough to bankrupt poor old Westpac, I think. But I mean, like, how big of a fine can you hand down before you just bankrupt a company? And I mean, there's issues if you bankrupt one of the main Australian banks, obviously.
Yeah. Sorry.
Then you cause other problems. It's like, what problems are worse, bankrupting the bank or the money laundering stuff?
True. Yeah.
But anyway.
Pretty strange.
Yeah. So there you go, kids. Don't money launder.
If you start a financial institution and get to become the big four, don't money launder.
Check
your money laundering.
Check your money the potential transactions that are to do with money laundering. Anyway, holy moly. Is that just about all we got for today?
Yeah.
Wow, 48 minutes already. Man, time has flown. I suppose we did spend a long time talking about Tesla.
True.
You're going to do a couple of Q&A questions and then head out of here and try and get this podcast over to Andrew?
Yeah, definitely. Yeah. By the way, guys, we're if you have any questions, head over to the YouTube version of the podcast. Click on the latest podcast and leave us a question there. Sometimes we have lots of questions. We only have a couple at the moment. So
only a couple today.
Yeah. Yep. So go ahead and ask. If you ask a question, it's very likely we'll be able to get to it on a future episode. So go ahead and do that.
Yeah, for sure.
I'll read this first one to you maybe.
Sure.
How to find the holdings of an ETF, an exchange traded fund. I'm finding this way more difficult than it should be.
Yeah, I guess that I don't know if ETFs have to disclose all of their holdings.
No, they don't.
Maybe they do every quarter, but you can just go onto so every ETF. So first of all, ETFs are offered by, companies like Vanguard or BlackRock, and Vanguard and BlackRock have their own websites which list all of their ETFs, and each ETF has its own page, its own fact sheet. You can look at the distribution information, the price, and the holdings are there as well. So usually if you go onto, say, if you're looking at VAS, the Vanguard, what's that? Australian 300, yep. Top 300. ASX 300, then you can go onto the Vanguard website and then you can look for VAS and you can find the page for VAS, and eventually, usually there's a fair bit of information first, but you scroll down, and it should tell you at least the top 10 holdings.
Yep.
That's how I would go and find out. But I mean, at the end of the day, if you know what the ETF is doing, like you see the investment objective of VAS is to buy into the top 300 Australian companies, there's nothing to stopping you from, Googling, what's in the ASX 300, and you'll probably find a whole bunch of other websites which actually list the top 300 Australian companies.
Yeah, exactly right. I think a quick shortcut most of the time would be just to search for the ETF, so Vanguard Australian Shares Index, for example, for VAS, and then just search for the fact sheet. So the fact sheet is where it has the summary of all of the information about the ETF, what was the dividend yield from last year, what index is it tracking, also like what's the goal or the purpose, I guess.
The objective,
that's the right word, of the ETF. And usually they give you like the top 10 holdings or something like that. Yeah. And then they'll tell you what percentage that makes up of the overall index. So for VAS, I think the top 10 represents a big chunk of the overall index, maybe like 40% or something like that. And that's going to probably be the case with most normal, like an S&P 500 index. The top 10 will be a substantial chunk of the overall, even though there's 500 stocks that you get access to. But yeah.
Perfect. All right. Last question for the day. Mm-hmm. So I'm wondering how you guys figure out what your exchange rates are for when you make investments in the US. Do you have an average price for your currency, or do you not worry about it and just put money into the US as you're making an investment? Thanks. So what's your approach here?
That's a good question. There's two things I want to say on this. The first is, so I mean, I'm not trying to predict what the exchange rates are going to do in the future or anything like that. So my rule is always, for the cash that I've set aside to invest, whether I'm going to put it in immediately or I'm just going to have it in cash, for that money, I keep some of it in US dollars and some of it in Australian dollars. So I just have a little bit of both for the cash that is supposed to be in my portfolio, for example. And that way I'm not at the mercy of a bad exchange, and I'm always kind of contributing into US dollars. So that means that my average currency exchange kind of averages out over a number of different days rather than just being, again,
a lot
at
of
the mercy.
A lot of Australians got caught out earlier in the year because the markets were crashing in Australia, but also a lot in the US, and they wanted to get their Australian dollars over into US dollars. But at the time, the exchange rate had dropped substantially, and we're only getting 54 cents, US cents for every one of our dollars. So it was a terrible, although it was maybe a great time to buy into some US companies, it turned out to be an awful time to get our money over into US dollars. So I think you're right. You want to try and, everyone's different, obviously not financial advice or anything, but for people like us, we want to try and have some cash AUD, some cash USD. And were you going to say something else about?
Yeah, the other thing I was going to mention is I like how Buffett sort of categorizes things as important and knowable or important and unknowable. So I think exchange rates are important but unknowable. So you can't, I don't think that I can, or at least personally, I can't reasonably predict what's going to happen, but they are important. They impact your return. So
they do, yeah.
For stuff like that, you want to make sure that you're keeping track of it. So using something, I hate to bring this up again, but using something like Sharesight just allows you to just instantly keep track of exactly how much you're gaining or losing on exchange, and how that's impacting your returns. So if you bought stocks in March, the exchange rates between the Australian and US dollar has changed a lot. And if you're just looking at your capital gains, you might think, oh, I'm up. But in fact, in real terms, you might actually be down, or you might not be up as much. So keeping track of that using something like Sharesight is just needed, very necessary.
That's true. Yeah, that's true. Because the tax rule here in Australia is that the tax office doesn't care when you turn your Australian dollars into US dollars or vice versa. It doesn't care when you actually do that process. That is just speculation on your part. For a capital gain, what they care about is the exchange rate on the day that you buy the shares and the day that you sell the shares. So you might think that you're making a big capital gain, but as you were saying before, you may actually not be making a capital gain because of the difference in exchange rates. So if you wanted to keep track of it, like I said, it's so much easier if you just use a portfolio tracker, something like a Sharesight. If you wanted to try and keep track of it yourself, then go to the Reserve Bank of Australia's website, and they will have day-by-day historical exchange rates that you can apply to your investments. If you wanted to do it manually, that's the place to go. Reserve Bank of Australia.
Who would want to do that?
Sorry? Who would want to? Just forget I said that. Edit that bit out. Do not do that. Sharesight is... Wait a second. Sharesight is the only option available, isn't it, Hamish? Is that correct?
It's the only option. You actually are mandated by law to have a Sharesight account.
Yeah. And the only way you can how do you access that Sharesight website again? You have to go.
So if you just go to the typical web, it doesn't work. You have to go to this special
It doesn't work.
Link,
yeah.
Sharesight.com/young investors. It's the only way you can access it. So yeah, just do it.
Exactly right. Yeah. Be careful. You wouldn't want to get caught out with that one. Oh dear.
It's so stupid.
Is that enough self-promotion for one day?
Enough.
I don't know.
That's enough.
By the way, you can also catch us on YouTube at Hamish Hodder or at New Money.
Go check us out.
Go and like our videos.
Might have seen us around.
Oh dear, oh dear, man! What a podcast! This podcast just feels different, just because I'm in a different place. I'm on the road. I'm run and gun. I feel like I'm just talking to you on the phone, to be honest.
Yeah.
Because I'm literally just sitting here on a bed. Like I don't have a desk. I don't have a chair. I've just got my laptop on the bed, and I'm just sitting here, just having a chat.
It's a very.
This is a highly professional, well-groomed, perfect podcast that we put together every week.
Oh yeah, absolutely, yeah. No,
I'm lying. I'm in a soundproofed booth. I'm in my recording studio.
I'm just glad we didn't miss a week. I was worried that I'd messed us up.
Yeah,
that we were gonna miss a week, but I'm glad we were able to do it.
I don't know. Yeah, I think there's something good about the consistency. I'm glad we got it done, even if it might be a little bit late. It remains to be seen. We'll see how we go. Anyway, should we wrap things up?
Yeah, we'll wrap it up there. Thanks everyone for tuning in once again. And as I said just before, if you have a question or a topic you want us to cover, then head over to the YouTube version of the podcast at youtube.com/The Young Investors Podcast, and just click on the latest episode and you can leave your question there. Or news story if you have something that you want us to talk about.
Yeah.
Thanks Sharesight as always for sponsoring, and as we just mentioned, sharesight.com/young investors. Get 4 months free when you sign up to a yearly subscription. Thanks Brandon for joining me as always.
Woo. Yep, no worries.
I hope you guys have a great week. See you later guys.
See ya.